All right. Hey, everybody. Welcome. Neil Trickett here, CEO of Practice Promotions. And I have a special guest today, a really good friend of mine, Eric Miller. He's from Econologics Financial Advisors. He's one of the co-owners there, co-founders. And he actually helps us a lot with our financial advice. And he works specifically with private practice owners across different types of industries. PT is one of them. So he has a lot of great insights that he's going to share with us today on what we can be doing in our practices to be more financially solvent. We got into business, right, to help people feel better. We love being therapists. We love helping people get better. But we also opened our own business because we saw a greater opportunity to have a better life, to make more money, than just being a staff physical therapist. So there is a lot to learn about finances, which I discovered many years ago when I met Eric and his group, that I really didn't know that much about finance, even though I thought I knew a little bit. But I've learned a lot more over the years and got better at that, thanks to his guidance. So he's going to download us today some 4 key metrics that you really need to be paying more attention to in your practice that's going to help you be more profitable with what you're doing already. So great to have you on board here, Eric.
Thanks, brother. Good to see you. And hello to all those wonderful physical therapists out there.
Awesome. So let's dive in here.
Yeah.
I know that, a couple things here that I've always taken away from what you've explained is that, you have to look at like how well you're working hard in your clinic, right? There's a lot of noise going on. There's a lot of fires that you're always having to handle, and you're trying to build this well-oiled machine. But at the end of the day, it's like, how well can you control your business? And that translates into your like home finances. And so one of the things that you told me was that, and I want to ask this question to our audience out there, is that, do you treat your household like the parent company to your business, or does the business run your household? Right? Can you explain this a little bit more, Eric?
Yeah. Oh, yeah. This is why, PTs that are constantly struggling with cash flow or constantly struggling with burnout or feeling like the business, they are a slave to the business. This is part of the reason why. And for as long as I can remember now, we've been trying to really change the viewpoint of practice owners to say, hey, look, if you really looked out there in like corporate America, you'll find that the biggest corporations out there have what are called parent companies, and the parent company controls all of the subsidiary or junior companies. You really want to kind of duplicate that philosophy. And really and truly, when you look at it, a country is made up of households, of families, right? So the family unit, the household, is really where everything kind of starts. And whether you have a business or a piece of real estate or a bank account or other investments, they all should be there to serve the goals and purposes of the household, not the other way around. So that's the viewpoint. So as a practice owner, now you spend a lot of your time and attention in your practice because that's what you chose to do. But you also have to not only look at it, it's not a job, it's an investment. And it's something that should provide value, profit for the benefit of the household. Mm-hmm. And that's kind of the viewpoint that we try to push. And that way you start looking at setting up the right systems so that money can channel to the household. And you're looking at this thing as a profitable entity that should provide value, not just money, but time, social recognition, relationships with your staff and patients. I mean, there's more to value than just money, Mm-hmm. So but that's kind of the overlapping viewpoint, is that we really want to make sure that practitioners are looking at their business as a method to serve what the goals and needs of the household are.
I totally agree. And I love what you just said about, your business as the investment, right? Because
Yeah,
it's so much blood, sweat, and tears that you put into that thing, right? And I think one of the hardest things for me was really switching that practitioner mindset. So, you're a therapist and you say, "Hey, I'm going to open up my own practice," right? And then you start to learn like all the business stuff that you have to learn, like how do you negotiate leases and how do you operate staff and personnel and payroll and all these other things, right? And marketing. So there's a lot of learning to be done along the way, uh, and I think it's very easy to gravitate towards what you know really well, being a practitioner. So it's really easy to get in there, treat patients, and be very busy, but it's really important to then step back and make sure you have enough time carved in your week that you're operating the business, right? That you're so that you can grow it, right? You can be more financially solvent. You can have more opportunities. You can have more freedom, more time off. And I think one thing that I would love to see a lot of practice owners do is step back and think bigger, long term, right? So, because one day you will exit your business at some point, right? It could be
it
sooner
is a
rather
math,
than later, but hopefully you're
it
at
is
the
a
right point.
fact. Yeah.
It's a fact, right? You have to exit that business at some point, right? It has
Yeah.
to transition to somebody, right? You can't be 120 and making that thing go. Um, so the question is, how valuable will your business be at the point that you want to leave it, right? And the key to this is really the more systems and automation and processes that you have in your business, the more valuable it becomes, right? And the more you build your team and your key players that take a lot of stuff off your plate, the more valuable your business becomes. And what buyers want to see is, has that business had predictable growth over time, right? So sometimes you'll get practitioners that like, hey, I'm good. I got a couple therapists in here and we're just humming along and everything's hunky dory. But when comes time to sell, you've not grown. You've kind of kept stale there for years. And so then the buyer comes in and goes, hey, where's the opportunity for making this thing better, right? So,
Yeah.
so that also brings value to the business. So things to kind of keep as a mindset of, you're working hard in this business. Where do you want it to go and how will you transition out at some point? And I love that you guys work so hard with practice owners to help them through that.
Yeah, you said a lot of good stuff right there. You really did. I mean, when you talked about the vision and the getting the practice to a certain condition, like that's the owner function, right? The expansion, thinking about expansion. How do I expand this thing I'm creating? How do I leave it into a better condition so that whoever decides to however whatever transition method I decide to use, is it going to be in better condition so that it can continue on? Those are all, I think, owner functions. And when we get mired down in the day-to-day practitioner roles, that we forget how important that owner, wearing that owner hat, really is. And then, just like you said, to really scale it, you got to make sure that someone is wearing the executive hats, people that are getting things done, creating the processes, the systems. So, we always say, hey, look, pick two, right? Pick two of those. Like you can't be an owner executive practitioner full time. You just got to pick two. Be if you love practicing, be an owner practitioner, but you got to have to be an owner, right?
Mhm.
And if you like being the executive and like creating the systems and managing people, be an owner executive and then get out of practicing. But just pick two. Just know
Yeah.
yourself. And I've seen it work either way. I've seen both ways really work, but you have to do them, and at least you know their roles, and that's really key.
Excellent. Yeah. So, Eric, why don't we dive into what you were going to show us today and
Yeah.
some actionable items that our clients and our therapists out there, practice owners can do to move the needle a little bit more, things they need to pay attention to from a financial aspect in their practice and their business.
Yeah, and I think it goes back to the fundamental problem that we see for businesses and for households financially, is that people tend to underestimate how much they need in income, assets, resources, and production to really be able to live the life that they want to live, and not always like feel like I'm stressed about money all the time, you
Mhm.
know? And that it really starts there with like, okay, that underestimation. So, a lot of people are operating on the wrong numbers
Mhm.
and the wrong metrics, and we really want to just make sure people kind of have their attention on the correct thing. So I'll share
Yeah.
my screen right now so that we can see what the heck I'm talking about here.
Yeah,
But
let's do it.
one
I
of
would
the
say that, and I wanted to tell this story because I think it has such relevance. Especially right now, like the way that inflation is going berserk,
yes,
right? It I had this conversation with Amy, my wife, last night, and then we were just talking about the price of everything is going up, and like, what about our parents, or we were just thinking about like patients that we had in the past that were elderly, and what they had saved as a nest egg, right? And that what's the value of that nest egg today? It's like half of what they had retired with. So I think that's again like coming back to this estimation of what you really need financially from your practice in order to retire one day, right? To
yeah,
exit that business. And it's going to be, if you're thinking, hey, I just need to make um $100,000 a year from my retirement savings and everything when I retire. Well, 20 years from there, when maybe you're like 70 or something, that's going to be like $50,000 value, right?
yeah.
So yeah, I had that like conversation with my wife last night, because it's like, hey, we have to save like double what we think we would need just to overcome inflation.
You guys are doing good, but it's definitely the target does have to be different. It really does. I think there's always this mindset that if I just have a couple $1 million in retirement reserves, or my value of my practice, then I'm good.
Mhm.
And define good, because if you're kind of worried about money all the time, worried about if you're going to have enough for food, worried about if you'll it only takes one lawsuit, one major health issue, one stock market crash, one economic shutdown that can really have an effect on all your assets. So you do have to have a lot more than what you think.
Mhm.
And that goes back to, I think, the first metric that we have to look at is that what of your investments that you have do you have the most control over? Of course, is that your practice. You don't have control over the stock market, you don't have control over the real estate market, you do have control over the value of your practice. So the first metric that we look at is, what is your growth rate? Because you made a really good point. If you're going to sell your practice for what would be considered maximum value, boy, you cannot show a buyer that you're staying stagnant in growth. All right, they will not like that. They want to see that your practice is growing. Now, what percentage? It's kind of an arbitrary thing, but at minimum, I would like to see over a 3-year rolling period, every practice at least up 25%. So if you took like 2018 to 2020, I'd like to see at least a 25% growth rate over that 3-year rolling period. All right, and so that at least indicates to me that you are on an uptrend. You're doing marketing. You're getting new patients. You're getting more referrals, and your practice is growing. Because you got to remember, the value of your practice is usually going to be based upon a multiple of your earnings. Okay, so if your practice is growing like that, and in some cases, I've seen PT practices sell for like 8 or 9 times what their earnings are if they're really good practices. So think about that. Like, for every dollar of profit, it's worth almost 8 times that in the value of the business. That
That's
I'll say
amazing.
that again, everyone.
Yeah.
Like, every dollar of profit that you make is worth 8 times in the actual value of your business, if you have a business that's doing pretty significant numbers. Now, it could be 5, could be 4, whatever. It's like that's important. So metric number 1 is really knowing your growth rate, and that kind of leads into another thing that I want to make sure people are operating with, and that's your facility capacity number. Now, what is that? Well, as we've talked about, look, if you're going to own a business, you might as well get to its full potential. And the full potential, of course, is, I have this facility. It's so many square feet. I have so many people in it, so much in equipment. If I get this thing rocking, I mean, where people, I'm at 90 to 100% capacity. People are getting in, they're getting service, they're getting better. I'm, offering other services. Like, what could my facility really do in income? Like, I was surprised, Neil, when I asked people that question. Like,
Mhm.
1 out of 10 practice owners actually knew
Oh
that
yeah,
number.
it's
Yeah,
really fascinating. I asked that question too, and a lot of practice owners, they just don't know it, right? They don't
yeah,
know because again, we narrow our focus to the day to day instead
yeah.
of like what could this thing do, right?
Yeah, and think about it. So I got a real quick example here. We'll just go through it. I mean, this isn't like super science, but it's close enough, just so that everyone can start thinking about like what that would mean. So we'll take a 3,000 square foot PT practice that based upon metrics I've heard in the industry. That would mean that you can probably see about a max of 60 patients a day in that kind of facility. All right. We'll take an average reimbursement of $100, whatever that would be. So the daily income potential for that practice would be $6,000. Well, you take 23 days out of the month, what I think is the average number of days that the practice would be open. You're looking at just on reimbursed services, 138,000 of income potential. But that doesn't stop there, because we're talking about getting it to maximum capacity, like using the space completely. So there's maybe other services that you can provide: equipment sales, massage therapy, laser personal training, coaching. Like, how much more could you do if you were utilizing your space to its full capacity? Let's say it's another 20,000 in
Mhm.
services that you could provide. Okay, so now you add that up. That's $158,000 in facility income potential, which is
Yeah,
almost $2 million a year.
that's huge.
And I
Yeah,
tell
and
people, yeah,
with practices, I give them suggestions of what we did in our practice, right? Because being in South Florida, our rental rate, our lease rate, by the time you factored in other costs, was like $40 a square foot. It was insane, right?
yeah,
So you would like try to squeeze every ounce of work that you could in that space. And I think one of the mistakes a lot of practice owners do is that they don't fully utilize the space. They think, hey, I'm getting busy here, let me expand to a bigger space, or let me open another location when they're not quite at their maximum capacity in their existing space. So you're not maximizing the profitability of the business with this fixed cost that you have, right, which is your lease. So we did things like, you could stagger lunches with your therapist, right? You could have earlier hours, later hours. We had like Saturday mornings was very popular for patients, and it was great if someone canceled on a Friday. We didn't lose that. We could pump them right in and catch up on a Saturday. And we just had like rotating schedules for therapists, so they had four days off one week, and then they could work the following Saturday. There's all kinds of creativity that you can do to optimize the space that you have.
100%. And we talk a lot. I say this all the time. It's like the biggest expense that you have. It seems like it's payroll. It seems like it may be taxes, but actually the biggest expense that you have is money that you should have made, but you didn't.
Mhm.
Because I can take a look at a 3,000 square foot facility like this, and let's say that practice owner is doing 115,000, and they could be doing 158,000.
Mhm.
You see, that's a $43,000 expense, because it's money that you could be making, but you're not.
Right.
And that's what we're trying to get people to practice owners to see. Like, look, let's get the maximum use out of your space. Why expand in all these, having 9 different practices that are operating on a 5% profit margin or a 10% profit margin, when you could have a couple operating at 20%?
Mhm.
And probably easier to manage too, doing something like that. But the facility capacity numbers is a really key number that I just want people to start thinking about, and figure that out for your facility. Because how do you bridge that gap? between what you're doing right now and what your facility capacity is. And it's definitely like, I got to increase my marketing on whatever services that I want to provide, which kind of leads into the next slide right here, is like, how do I do that? Because I know that a lot of, we don't really spend enough time on looking at our income sources and services in our business. And we kind of looked at that and said, okay, well, optimally, if you're going to offer services in your practice, what are the characteristics of those services? Well, number one, they have to provide a profit margin so the business can run and expand. They should be something that people want, that they're in demand, and ideally they're easy to deliver to that degree. So those would be the three characteristics that we'd look at. So I had a physical therapist fill this out for me, so it may not be 100%, so people can disagree on what the numbers are. But these are examples of some of the sources of income for a PT practice, right? So you have reimbursed patient care. I guess non-reimbursed patient care would be other services, equipment sales, supplement sales, performance screening, institutional contracts, dry needling, wellness program, and gym membership. I'm sure there's more, but I'm giving you an example. I would have everyone do this. And then from there, first thing to do is rank, okay, of all these, which ones are the highest profit margin? So we just rank them from 1 to 9, right? 1 being the highest, 9 being the lowest. And then from there, you rank which ones are the highest in demand, okay? And then the next part of the exercise is rank which ones are the easiest to deliver. And the purpose of this is to really get you to critically look at your income sources and then figure out, okay, well, which one of these should I really be marketing and pushing, right? Like which of the top 5 of these should I be marketing, right? So because ideally in a perfect business world, you want to have products and services that are really profitable, are people really, really want, and are easy to deliver. And those should be the things that you're trying to market.
And I think I've got a good example here. I mean, one thing you can't change in your practice is time. That is your finite resource, right? And so where are you going to put your time and energy? It can be in things that you love to do. Maybe you love to do performance screenings, right? That you love working with sports athletes and doing that kind of stuff. But at the end of the day, it's much less profitable for you than treating a non-reimbursed plan of care, right? So just kind of an example there. So for example, we had one client and they were having some trouble with the conversions on their website, mostly because they were very heavy on sports performance training, like this kind of niche, things that they really enjoyed and loved to do, and they wanted to like push that so hard that they missed the opportunities of all the other people that have hurt themselves and need help, right? So by focusing on one smaller particular audience, they didn't get what they needed to go with the practice, right? So that's a kind of an example of, I love this exercise here. I think this is something that every practice owner should do, because it really brings clarity into terms of like, hey, I've only got so much time and so much resources and marketing effort that I can put in here. Where am I get the most bang for my buck?
Yeah, and to your point, you can still do those things, but don't do it to the detriment of providing these other services that keep your practice solvent and expanding at the same time. So I think that's a great example of that. But this is an exercise, and I can give you like a link to this so that you can send this out to everyone, so they can do it on their own. But
and sometimes in the practice too, I mean, I'm sure we could have people relate to this. You'll get a therapist on your team that went and they had a particular, interest in abdominal pain, right? So they went and did like visceral manipulation courses and stuff. They're all jazzed when they come back, like, we need to be seeing more of these patients, right? But
Yeah.
your bread and butter is back pain and neck pain people that come in, because that's like, let's face it, 50% of people have back or neck problems. So, you know, you put like, oh yeah, we're gonna market that. We're gonna go and do all kinds of abdominal pain marketing, and we'll go visit doctors about this, blah blah blah. But the reality is that that's very misunderstood, and people don't really understand much about like, why would they go see a physical therapist to help me with some, like, you know, stomach upset, right? So that's just an example. Like, you'll get stuff come from your staff that they have a fascination and interest in, but it's kind of balancing like, okay, well, how can we help you with that, or that fascination, that interest, but not take away from what is working for the business.
We all do like to go chase shiny things, don't we? We really do.
It is
it
the
it is fun. It is totally fun. But you're right. You really staying on your purpose and focusing in on those things and trying to get rid of all the distractions, even though they look good. Man, that's a skill. And you know, but you do have to get back to basics, really, if you want to, you know, expand the business. So, you know, what is that? I mean, obviously broaden your referral base, you know, looking for fee for service, cash-based services that you can provide. I like the startup satellite location in a fast-growing area. I wouldn't do it if I wasn't at capacity in my current facility. So it's a good idea. Just don't do it. You know, don't try to solve an income problem by starting another practice.
Yes, that is a
Don't
huge
do that.
mistake that
It,
many
it's a
practice
big,
owners will
big
do.
mistake. And add services that complement your primary business, right? That I think are complementary to those things. Those are all some things I think you can do. I don't know if you wanted to talk about any of those, but
No, there's a lot of things there that I think, again, that could be capitalized on. Easy things, you know, from massage to. I will say one thing that I've always seen, and I think in Canada they do this much better than they do here in the U.S., and that is working with bringing in ancillary services. So if you know, if you're a PT clinic, how can you bring in massage, acupuncture, even chiropractic, right? Um, the clinics in Canada do a very good job of providing this like one-stop shop where they can market. We do chiropractic, acupuncture, dry needling, you know, physical therapy. They might have some wellness programs, and it's fascinating because people, I think, mentally see that and go, wow, this place has a lot of different things to offer, so they can help me better. So they'll gravitate to the clinics that offer more ancillary services. So I think it's an opportunity here for especially clinics in the US to like, how can they bring in different types of services, which makes them more marketable as a whole.
yeah, for sure. Yeah, for sure. Uh, that is, you can't rely on one of anything for too long. I hear that all the time, and I think it's definitely true in business as well. Going back to practice growth, though, I think you know, as an owner, you know, you really have to make sure, you know, your associates are producing. They have to have targets. You know, I know people don't like to necessarily push their associates, but those are the people that are delivering your service, and you really need to make sure that they're producing. Training staff on selling services as well, or at least making sure that, you know, people are. I see this. It's not being done enough. Like, your organization really needs to, you know, number one, believe in what you're doing, and like, they're mentioning it all the time to people, like, we do this and we do this. Oh, did you know that we did this as well? Like, in every aspect of the organization, I think it's really key. Everyone buys in to what that would be. You got to track production metrics and staff and practice gross income. I mean, I think that's just part and parcel of running a business for sure. We just did this, do an income source evaluation to make sure that your services that you're providing are able to create a solvent organization for you. There you go. Boost marketing efforts and update your website, social media, and online advertising. I can tell you, in talking with some buyers, that's super important to them. Like if they don't want to buy a practice that really doesn't have a really good online presence, you know, that's a red mark, so to speak, in that
Yep,
respect.
definitely. And we've always talked about this, but marketing is an investment in your practice.
Yeah.
It's an investment because it produces a positive rate of return, right? It's not a fixed operating cost like you're paying for the electricity, right? Or you're paying for the water or your lease, right? You with this, you will be able to produce much more when you do it right. And going back to what you were shown before with the profitability of the practice, the only way that you can really maximize the capacity of your business in your location is by filling it to the brim with new patients, right? And doing an awesome job servicing them. And so that's where you need to really make sure that you are allotting the time and the resources and the finance towards your marketing efforts to get as many people in the door as possible.
I was talking with my partner today about spending money on marketing and looking at it like this is actually a tax strategy for a lot of people, because if you don't really have if you're having a tax problem, what better way to get a tax deduction? Obviously, spend it on a marketing program and have that create whatever that creates, because it's certainly not going to reduce the value of your business.
Mm-hmm.
You know, it's only going to make you more known and more well thought of. So I think that's I look at it that way too, especially for people that are going to need some kind of tax strategy.
Mm-hmm.
I'm going to combine two more metrics here: profit margin and reserves for the business, as things that I think people need to make sure that they pay attention to. Profit margin, everyone, I think, inherently knows that they have to be profitable, but there's always a struggle of how do I get to that 20% margin? How do I get to that magic number of 20% or higher? And I think that, and then of course, in relation to your business reserves, it's a metric not a lot of people paid attention to, that bit them in the butt prior to last year.
No doubt. No doubt. That was a hard lesson for us to learn.
Yes.
Sure, right.
Like, oh, maybe it is a good idea if I have a rainy day fund in the business, right?
I mean, what would have happened to many practices if they didn't get that PPP loan?
Oh, we would
Right?
be, there would be a vast shortage of practices, and people would not be getting care right now
Yeah.
because of that. It really did. Say what you will about government spending. That was one of the few times that I saw that money that got directly into the hands of the people that actually needed it, and it worked.
Mm-hmm.
So it really was something that worked pretty well, very well, as a matter of fact. But I think going to, and I will go into some solvency solutions here. I do want to get into like these other metrics here, but look, I think from a solvency standpoint, it really is more of an attitude. Look, solvency is the most important thing that an owner has. Like, because if you're not solvent, meaning more money's coming in than what's going out, you're not going to be in business very long. Mm-hmm. So you do have to constantly review your business finances. I mean, on a weekly basis, right? Understand like what your make break number is. Make sure you have income targets. You have correct income goals for the practice. Definitely don't delegate financial matters to incompetent people, or have incompetent people on your collection lines. That's a death sentence right there.
I've painfully learned that lesson back in my practice, but we turned it around.
Yeah, you cannot have, and people are like, well, what does that mean? Well, it's the person that's always having personal problems, or constant. We're all gonna have personal problems, but constant problems, and it's just dangerous to have those kinds of people on your finance line. Move them somewhere else in the organization if you want to keep them. Get them away from the money lines. Um, Definitely understand the difference between an investment and an expense. Anything that you outlay that's going to create more value for you, that's an investment. And that should be something that a lot of you do. Develop an effective system for collecting undelivered services. And then really down dips in your practice revenue, you don't wait, please. If you see that the practice is starting to like take a dive, if there's a bad month, don't, okay, well, we'll just see what happens next month. Like attack that right away. Don't wait 2 or 3 months, because by then it could be too late. So you really have to like I said, it's really more of a mindset of constantly paying attention to your
One thing I've
business.
noticed with that, being in business for over 20 years now, is that, like you said, if you don't attack it quickly and you just let it go, it takes a while to recover. And I've noticed, like, from a marketing standpoint, from business standpoint, um, you it takes time for things to spin up or spin down, right? So if you're
Yep.
seeing things spin down, just realize it's going to take some weeks for things to spin up too, right? So like the more you can get ahead of that curve and not let it spin down, then you can maintain through, let's say, a summer month or something where things
Yeah.
will typically be a little slower. Like, that's where you can be more proactive, right?
100%. Yeah, you see those things coming. You can predict when it's going to happen. You have enough data to say, these are typically the months that we see a drop off in this. Well, do something about it, because you'll know that's likely to happen. But yeah, you're right. If you fall below your make break number the next month, not only do you have to meet your make break number again, but you got to make up what you didn't make for that month before.
Right.
That's why it takes a while to get back to even just on that. So, how do you handle all this? I think it really comes down to understand the two golden rules of income and expenses. And the golden rules are, your practice is going to try to, it's just going to try to spend everything that it makes and then some. All right. Don't fight it. It will. Uh, Make sure you have someone that is a bulldog on your finances, though, that can say no to
Mm-hmm.
things. I don't like to say no to anything, but I don't run the finances in our business. Diane does, and thank God for that. But you do need to have someone that just recognize that's going to happen. There's always going to be demands on your money. But the good news is that it's also going to cover, and it's going to make what it thinks it needs to make to keep the lights on, to keep the practice, running.
Mm-hmm.
So how do you utilize these two basic rules? Because a lot of us are operating on a make break number that is incorrect. When I say make break number, like, I'll ask you this: like, in the past, if I would have said your make break number, what would you thought that consisted of? Like I said, hey, what's your make break number, Neil?
I would have thought that it's just just covering my expenses.
Yeah, just your traditional operating expenses, right? I just need enough so that I can cover my payroll, my rent, my mortgage, maybe, my marketing, maybe a little bit in business savings, and enough for me to take just enough for my household to cover my basic expenses in my household. Like, that's traditionally what I think most people have looked at as a make break number,
And even for
right?
some, and it would be interesting to kind of survey our audience out there, but from a practice owner point of view, I mean, I've definitely talked to a lot of practice owners who, on tough months, they don't take a paycheck,
Yeah.
right? And so they don't consider their paycheck as part of this expense, right? Like, hey, I'll just glean the profits off of whatever we get that month. They sometimes they may have a very small payroll for themselves, right? And then they just take any profits off the top. So when there are no profits that month, then it's sort of like, oh, well, we covered our expenses, but they really didn't, because they didn't pay themselves.
Right. I mean, you're an owner, and there there's a fee for that. there's a compensation that you should be taking for that.
Yeah.
And again, but this is just a misunderestimation of how much is actually needed, right? And if you really grasp this and you start putting it in to how you function your finances, it doesn't happen overnight, I can tell you that, but it does start to flip the switch a little bit in how you look at quote unquote expenses. And the way that we look at it is like this business owner has a demand for $100,000 a month for their business to cover all of these things right here, as you can see. And that's how much income they'll most likely make, because that's what they think they need to make to cover all of these expenses. But it's incorrect, because they're not really, to your point, they're not putting in what I would consider vital expenses that need to be part of the overall calculation. I think the first thing is like your owner compensation, not what you take out to pay for your lifestyle, but that 10% that you should be taking to the household so that you can create other income sources and build reserves and all of those things. That's vital. That is a vital expense that you need to put in. Your personal taxes. I mean, your business has a profit, but who's on the hook for the taxes? You are personally. So I would include that as far as what the business needs to make, and put it in as, okay, I need to have money going into a tax account to pay for my taxes. Business savings, so that you can have a legal and protection fund. There's one I call a business expansion and development fund. So that would be like, I'm tired of people always borrowing for, new equipment or down payments on new locations. Like, why don't you just kind of embed that as an expense so that you have the money to do that? And then, I jumped up the marketing, because I don't think people are spending enough money on their marketing efforts, near what they should.
No.
And
The average in healthcare in the healthcare industry is 8% of what your gross revenue is. Gets put towards marketing. On average, in the PT industry, it's less than 2%.
Yeah, that's bad. I don't know how else to articulate that. That's just bad. Should be, it should be 10 in the 10 to 15% range. I think, especially if you're still trying to grow.
Yeah,
it definitely needs to be that. But look at, what changes here is that if you really looked at it and you added all these things together, that new make break number for this practice is 125,000. So they thought it was 100, but it's actually 125 when you embed all these expenses in here. Now you can get over the, oh my gosh, how are we going to make up that 25? It's going to take forever, blah, blah, blah. But I think that's not that hard to make up $25,000 a month. If you really look at what areas, it's not as many patients as you think, it's not adding that many. It's not as bad as you think it is.
Right. It's like 25 patients.
What's that? Yeah.
It's about 25 patients.
Yeah. It's not that much. But the key is just making sure that you get these things in as expenses, set up the account so that money can flow into those accounts every week. Start on a gradient. So definitely don't start like trying to do this like at the full percentages. Start small and then just gradually build up, and the business will get used to them as expenses. And then one magical day you'll look up and you'll be like, oh my gosh, I got $200,000 sitting in my household wealth storage account. That's pretty awesome. So I'll go to the next one. I think the last one that I'll talk about, not a lot of people think about it, I just mentioned it before, is your effective tax rate. And you're like, well, that's a household metric. I go, it is, but like I said, most people that own a practice are S corps, and your profit of the business, you are liable personally for. So how do you get your effective tax rate reduced under 30%, right? Because it is a big expense for most people, and that's where you start looking at, other tax strategies and increase, maybe buying a piece of real estate, marketing efforts. It's like, how do I start looking at that number and like getting my effective tax rate under that 30% number, because it is a big expense that everybody has.
Mhm.
So that's another metric I think a lot of people just aren't paying enough attention to, and I want to make sure.
Or they might feel like there's not a lot that they could do about it, right?
Yeah,
There is a lot that you can do about improving your tax rate. Right? There's a lot of different strategies, and I learned a lot about that from you. So just realize that there are things that you can learn and do and work with people to help you, reduce your tax rate.
there's probably too much on here, but I will say that they are predictable. People, you guys should never go into debt to pay your taxes. Um, I wouldn't accept lazy tax planning. Like if your accountant just says, hey, put all your money in a 401k plan or buy a bunch of stuff that you don't need at the end of the year, that's pretty lazy tax planning.
Mhm.
And I would get a second opinion every 2 to 3 years. And then, just learn about, you have to look and learn about some non-mainstream advanced tax strategies. I think I included a couple here that most people can do. And I would say that, hiring dependent children. I don't know if you've done that yet. You got your kids on payroll yet?
No, I haven't taken that leap yet. I try to get them to do some stuff, but I got to get them to work a little harder.
You can rent your house out for 14 days out of the year. That would allow, you can have like a business meeting at the house with your key executives, and it's a business expense. And then you can you get the money personally tax free. Not paying yourself so much in salary and taking more in profit distributions. And then if you do have real estate, I know a lot of practice owners own their building, making sure that you accelerate the depreciation through what's called a cost segregation study. So to your point, there's things you can do to do that. Not only that, but as we've talked about, like effective training training in the business, effective marketing programs, those kinds of things also give you a tax break and build the value of the business, which I think is the most important thing
Mhm.
that you can do.
Yep.
So I think that's pretty much it for the metrics that I have.
Awesome.
Yeah.
Cool. All right. So if thanks so much for all that, Eric. I mean, just a wealth of knowledge here. No pun intended.
Hope it wasn't too much. We gave him a lot to think about, didn't we?
There's a lot to think about, but the bottom end is, if you're looking at kind of these four key areas, you're gonna really make a difference in where you want to go with your lifestyle and your practice, and just let's face it, if you can work on running a smoother business that gives you a ton more freedom, you can feel good about going on vacation, things will run smoothly for you. You know that you're building your business, you know that it's producing you the income that it should be because you've worked so hard to get it to that level, right? And then you're building this asset, right? This business is an asset for you. So but I think one thing that I just realized a long time ago was that I didn't understand much about finance, right? I was very much into practicing. I realized that I had to learn a lot more about business. I
Yep.
realized that I had to learn a lot more about finance. I'm still realizing that I need to learn a lot more about finance, and it's an area that you just need to focus on a lot. So I would highly recommend talking to Eric and his team over Economics Financial Advisors. They do specialize in helping private practice owners look at many things with their business and their household to get to a better financial condition. So, Eric, I think you got something here that you can offer our
Yeah,
clients
I
more
was going to
information.
say there's a couple things, and you touched on this. I mean, everyone that's on here that owns a practice. I mean, you want to create a profitable, valuable, and not only that, but you want to make it fun and enjoyable too along the way.
Mhm.
But there are key areas that you really got to look at, and it does start with knowing what your transition looks like. making sure you got a kick butt financial team that is helping you in all different areas, that you're getting your personnel grooved in so that you have a good team. I mean, that's where I think most people struggle the most, is really getting everybody to have a good team.
Mhm.
Stable practice systems, viable income growth. That is your, I think that's obviously what you guys do, Neil, is really show practice owners how to become more viable from a growth standpoint. Making sure that all of your assets of your business are in good shape. That's like your corporate documents, and the facility looks good, that you're financially solvent, that you're emotionally like in a good space, because unfortunately, you know, your emotional well-being is going to have an effect on the practice. So you really have to make sure that your headspace is good. But these are the areas that I think that really build a profitable and sustainable business. So look, if anybody wants to meet with me for a 15 to 30-minute consultation, then there is I don't know how we would do this, that we can set up that, or actually just go to practice transition assessment. They can actually fill out an assessment. It's 100 questions, and that would allow them to kind of get an idea about where their practice is, the condition of it is, and see what areas they could potentially work on from there.
Yeah.
But those would be the two things that you can do. You can schedule a 15 to 30-minute consultation with me, and I'll provide a link. Maybe we can provide a link.
Yeah, we'll provide a link for everybody here to those areas, as well as that phone number there if you want to set up a time to talk with Eric or his team there, just to kind of get an overview of some things that you can be doing or start to look at in your practice a bit better. I would recommend also really taking the practice transition assessment. I mean, I've done that in the past. It's been very enlightening, very helpful to kind of look at things from a financial perspective in your business and household, and kind of understand like, where am I compared to what the norm is, like where the norm and then also the ideal scene of that is. So I think it really helps you to understand what are your strengths, what are your weaknesses, and areas that you can focus on. So we'll send out that link too, so people can get to it.
Yeah, nobody likes to get an
F. Awesome. Well, thanks so much, Eric. I really appreciate you taking the time to help us today understand a little bit more about what we need to be looking for from a metrics and a financial perspective in the practice. So again, everybody, thank you so much. Thank you, Eric. And we'll catch everybody next time.
Goodbye.